Vivian, too, the personality behind social media channel Your Rich BFF, has just released another book, Well Endowed. She's a New York Times bestselling author, has 4 million followers on Instagram and nearly 3 million on TikTok. Here to discuss her new book and social media channels is Vivian, founder and CEO of Your Rich BFF. Vivian, thanks very much for joining us.
Thank you so much for having me.
Thank you for being our Rich BFF. We appreciate it. Your new book, Well Endowed, is kind of a continuation. Where does the focus go with this book?
Yeah, so my first book, Rich AF, focused all about the basics, getting your financial house in order, things like budgeting, saving, investing, paying down debt. But Rich AF didn't cover the more nuanced moments around your life that happen. Things like making those biggest purchases, your home, your car, that insurance, how to navigate finances in your relationships, for your children, for your parents, and even how to really set yourself up for a successful retirement and then leave something behind through estate planning. And that is what Well Endowed goes over.
Vivian, a question for you just on the investment side of things. So if you're focused on young investors, I've seen a sort of a mismatch between investors that want to get rich now. They want to buy the meme stock, they want to buy the short stock and, have the short squeeze, versus the sort of the reality, which is get rich slowly is a far better thing to do. Can you sort of talk about how your followers sort of adapt to that and what you're telling them and how to manage that process?
Yeah, I think that mismatch comes from a place of feeling incredibly disenfranchised, if I'm honest. This next generation has never really seen an economy that has served them. Their parents were able to work a steady corporate job, take 2 vacations a year, end up with the 2.5 kids, golden retriever named Rover, and still manage to retire at 60, 65. But a lot of young people are feeling like if I can't hit it big today, then this likely will never happen for me. I try my best to educate the next generation that, frankly, the stories that they see online of the Dogecoin millionaire or some meme stock making somebody rich, that's, 1 in a billion, and likely isn't going to be you. Something that my mentor taught me on Wall Street was that every trade has a winner or a loser. And if there is someone out there who's made all that money off of these incredibly speculative investments, you've got just as many people, in fact, more people who've probably lost that same amount of money. And so I just think it's a little bit frustrating for me, but I tell them the tried and true method is to buy and hold in a diversified portfolio for the long haul.
And it's really changed for a lot of them. They are investing more, I think, than younger generations before. They're not looking at the house as something to own necessarily. I mean, a lot of people feel that it's out of their reach right now. That may change, but they're really focusing more on the markets. And how do you balance that for them? That they want to get rich quick, but also is a home part of your plans as well? Or do you say, no, just stay with the markets?
Yeah. So I do think that there has been a little bit of a myth perpetuated across both social media as well as just the financial space, in that if you don't buy a home, you are a loser. And I just don't think that's true. Right now, we know that it is cheaper to rent than buy across nearly all major metros. So it financially may not necessarily make sense to buy. That said, if buying a home is still part of your, lifelong dream, I'm not going to be the one to sit here and tell you not to do it. Not every decision you make has to be a pure play financial one. Furthermore, I think a lot of young people are becoming more creative. The house buying, home buying thing that our parents did was put money into a primary residence. But knowing that primary residences are the one that you live in and likely aren't going to appreciate the way that perhaps an investment property could, or provide you the type of cash flow that an investment property could. I'm actually seeing a lot of young people have their first purchase, their first home buy, be an investment property that they then further rent out versus having it be their primary residence.
Vivian, one of the issues that we see in Canada is no one focuses on deaccumulation. So assuming one of your followers has done very, very well, it's time to retire. Do you have any good tips for them in terms of how to sort of take that money out and start coasting with the money they've made?
Yeah, I always say make sure that your income from investments essentially replaces your income from labor. If you are able to have a certain set of money that provides you your quote unquote yearly income at a very dependable, consistent return. So say you get a 4 to 5, maybe 6% return on your investments, and that amount of money, those returns can cover your lifestyle, you can actually consistently take that amount out. Furthermore, I think something that folks who are certainly of higher net worth are really interested in doing is actually borrowing against those investments so that those dollars coming in the door don't necessarily count as income. So I think there's a lot of strategies to it, but what I would say makes the most sense for the average person is to keep it simple and just make sure that their dollars invested can essentially provide them a year's worth of income every single year so that they never eat into the principal.
We just got one last question before we go. Thank you very much for joining us, Vivian. This is probably one of the most educated generations when it comes to finances. Does that make it easier, or does that make it harder and more dangerous in some ways?
You know, I think it can be both, to your exact question. Yes, I think it's incredible that the way the internet has essentially democratized access to this information. But I think the most dangerous thing is someone who knows a little bit, right? Because if you don't know anything and you feel very lost with your finances, you won't make any major moves in the hopes that it'll make you a bunch of money. But once you start to get, know enough to be dangerous, you might start to think that you know more than you actually do, and thus end up making some decisions that aren't necessarily prudent. What I would encourage people to do is not just know a little bit, but make sure to do your research on every single financial decision you're making in your life, because it is important. Unfortunately, the work that I do versus, something of a more traditional lifestyle influencer, the consequences are vast. If somebody tells you, you should buy this $12 lip gloss and it ends up being terrible, you've wasted $12. And, unfortunately, that's $12. But if you are taking information from online about investing or budgeting or paying down debt and you make a wrong move, the consequences could be in the thousands. So one, I take my job very seriously. And I always say, don't trust everything you see on the internet, even if it's from me. Just double check, make sure that you have a couple different reputable sources telling you the same thing.
All right, Vivian, thank you very much for joining us. We appreciate it.
Thank you so much for having me.
Vivian Tu is founder and CEO of Your Rich BFF, and her new book is called Well Endowed.